What's up, everybody? Chris over here, founder of Pollinate Trading and the host here of the prop trading course. This next lesson, we're going to be talking about the different type of prop firms and choosing a prop firm. All right. First things first. Yes, this is the prop trading course. It is free. All I ask is that you like this video, subscribe to the channel, and share it out to somebody you know who might actually be struggling with prop trading, wanting to get into prop trading, or getting trading as a career. By the way, just because we're talking about prop trading here does not mean that it does not apply to regular traders or anybody else who wants to make trading living. So the name prop trading is just about professional risk management. Okay, so far we've covered, in the first video, we covered why trade prop. Second video we did, you need a trading system. And the third, we talked about risk management. In this one, we're going to be talking about choosing a prop firm. Okay, they are your partner. And much like any business endeavor that you get into, you want to make sure that your partnership is solid. And if you start out with aligned goals at the beginning, then you're going to choose somebody as a partner that can have a long-standing relationship. If your goals aren't aligned, it might be a short-term relationship, and that's fine too. But some ideas of what the aligned goals would be, this is my thinking here, as traders coming up. Like, what would you want to be? What would you want to do? Replace a full-time salary, right? Let's say you're working at another job, and if you could replace that with income from prop trading, then you could just trade instead of having to work another job, right? A big goal is to earn life-changing money. I have no doubt that everybody here would love to change their life with big amounts of money, and scaling up in prop is a way to do that. Not say it's the way to do it, not say it's a guaranteed way to do it. It is a way to do it. There is a route to do it. Another goal would be to continue to improve. I tell you what, a month ago, I wasn't as good a trader as I am today, and I continue to get better each week, each day. And having the opportunity of trading prop gives me that improvement. And then a long-term solution to funding and achieving your goals, at least financially. Okay, so we're going to cover, there's about 3 types of prop firms. Generally, I'm going to basket them into 3, okay? And the first type we're going to talk about here is a professional prop trading firm. This means you're licensed. So if you're in the United States, you apply, basically a company sponsors you, and you take an exam and you get your licensing. And so you've proven that you know how to manage money. And if you were to trade client money, you wouldn't be putting them in like the improper investment. They employ you as or hire you as an employee. Usually that includes a teacher, coach, or mentor. You're on a trading desk, you're on a team, and usually a senior member is there. They may not be the best coach, teacher, or mentor, but they're definitely the best trader. So sometimes it isn't about them being really good at teaching the things. It's you being really dedicated and really focused at learning what they're doing well, because they're not going to be teaching anybody if they're not a good trader. Some of the features of joining a prop firm of this type is very low salary, very long hours, and a high turnover rate. I've heard of salaries in the $20,000 or $30,000 a year range, and they expect you to be profitable within a year or 2. So don't think you're going to be profitable and making money in the first month. So that $25,000, $30,000 salary, expect that to last for a long time. And also expect them to just fire you one day. You will be trading on sim. Believe it or not, you're not going to be trading live money. They're not going to put a penny in under your management, under your control, until you're making money. So they're going to do a lot to get you up to speed. Again, it's high turnover. They just crank through bodies, and the ones that make it, they stay, and you basically get unlimited funding and potential. You may want to, after some time, you may find another partner, you find another firm, other places to go, but that's generally what it looks like. Now, on the other side of that, there is like the algorithmic quant style, and that's usually higher salary because you've already proven that you have the coding skills and the math skills that are pretty common to implement strategies. And in fact, the traders who are coming up with the strategies, they just need people to code them a lot of the time. Ultimately, in the professional side of this, it's all focused on returns. And by the way, this is very broad. Every business, every prop firm, it's completely different and narrow. If you go the professional route, you don't have a lot of freedom, and there's a salary in exchange for your time, of course, and there is huge potential, and you can do amazing things. Of course, you have to have education and skill and all that, and pass all the interviews to get through it. Now, the second type of firm is a self-funded firm. Okay, what this, well, I'll explain what I mean, but there's no licensing required. You provide risk capital, in other words, the stop out, and they provide software, data, technical infrastructure, support, low commissions, and leverage. So let's say you put in $25,000, $50,000 and they get you trading $500,000, $1 million, I don't know, whatever. It's their money, but your whatever you deposit in there is the stop out, at least initially. After you develop a track record with them and experience with them, you'll start getting bigger buying power, and the amount of money that you provide on your stop loss becomes a little bit less important, and that's just the over time. So if you do have some capital, let's say you're somewhat underfunded, you have a proven system, you don't need to be trained or mentorship or anything like that. You have a system that works. You've traded it. It's just you're not making enough money because you can't get the leverage. The only thing holding you back is bigger buying power. It's not discipline. It's not a system that works. It's just, I always say, if you can make 20% a year, every year, you're a freaking genius. If you manage, 100 million or $1 billion, if you make 20% a year on $5,000, you're nobody. But the difference is kind of the same, right? It's just the amount of money you trade. Of course, trading larger amounts have different issues, but if you can make 20%, you should be able to scale it up. If you have an algorithm or a high frequency type of system, maybe you scalp 100 times a day or something like that, going into a prop firm offers a big edge, because when you're paying $1, $2, $3 each way on a futures contract, you're down into the 50-cent range per contract on an E-mini. And typically you can trade future stocks and options in these firms. I don't know much of crypto prop firms at the moment, but I'm sure they're up and coming. And then the final one we're going to talk about is retail. There's no license required. Again, in essence, what you do is you pay a tryout fee, prove you can trade, manage risk, and follow their rules. They provide you capital, software, data. If you don't have much capital risk, like if you don't have the $25,000, $50,000, $100,000 to go the professional prop self-funded route, this is a pretty good route, because you put up $300, $500 and you have the ability to get a six-figure account. Maybe you have all your money already in investments, and they're already tied up in your house or in real estate or in 401k, IRA, things like that, where you don't want to pull your own money out. You already have a good system, and you just need the rules to keep you in line and the ability to scale. So if you have a proven system, this is probably one of the best ways to go. But there's some things we got to look at here. Even if you do have capital for a bigger system, a self-funded, this is a pretty good way to go as well, because it's very low input of capital, a couple $100 for the opportunity to try out. And you can scale it up pretty big to where you're not worried about trying to make 20 hours in a day. You're making 1 hour a day on 20 accounts. That's where, big money starts to be made. The most important thing here is that you have a proven system that you can trade, because ultimately you're just putting money up. And if you can't trade and you don't have a good system, you're just throwing money away at that point. So at least in the second two examples, the retail and the self-funded, it's very important you have your own system, or a system, I guess I should say, that you can trade. So we're going to talk most about retail prop trading today. We're not going to talk about the professional routes and any of that sort of stuff. I'll get into those things a little bit later, but let's talk about this one because this is I would say the biggest issue right now that needs addressing in the prop industry. The opportunity is massive, but there is a lot to understand. There's a bunch under the hood that you need to understand about. So I'm going to try to get into that. And the way it's broken down, and the way I see it, is you have a real money prop firm and an unknown money prop firm on the retail side. Okay. A real money prop firm means you put up your little bit of capital to try out and follow the rules. And then once you've passed, then they put up the big amount. So for example, like Surge Trader, you put on $10,000 and they give you $1 million in buying power, and your stop isn't $10,000. Your stop is $100,000. So they're providing $90,000 of risk in their own money. That's a real money account, not a notional sim account. Now, in the unknown money basket, it's the term I'm using because you just don't know if you're paper trading or live trading sim account, right? And you can read it in their terms of service. It'll tell you that whether they're that way or not. So, okay. So how do each firm, how do they earn their money? Okay. The real money prop firm earns their money based on traders' performance. Okay. So if you make money as a trader, they make money because they gave you money and they make a cut of that. On the unknown money prop firms, they earn their income largely on tryout fees and reset fees and management and monthly reset assignment fees. So you just think about that two world. One, the real money prop firms basically are putting up their own capital once you've proven that you can trade with their money. So they're putting capital up to back you. The unknown money prop firms are mostly trying to get you to pay monthly fees and sign up. Okay. The thing about unknown money, the reason why I call them unknown money is they don't let you know if you are trading money, live money, or sim. It's in their terms and conditions. They'll say you may or may not be trading a live or a simulated account. They may copy trade you, they may not. Now the thing is, I've seen many of these firms paying out with no issues. There's 50 prop firms out there, 100 right now, and I know people who've gotten paid out. I've gotten paid out. Like there's firms that do it, that these unknown firms, they do pay out. I can't vouch for every single one of them. I can only vouch for a couple personally. Other people can vouch for others or whatever, but you're still kind of, you're going to have to find out, I guess. It's their business. I can't, there's nothing I can guarantee or say about somebody else's business. I don't have access to their business. So I have seen, like I said, many examples of these firms paying out with no issues. And I've also seen many, many examples of these firms with these little gotcha rules where they actually won't pay you out, even though you have profit, because you broke a rule. Let's say you had $7,000 in profit and you broke a rule. These unknown money firms they'll not give you your $7,000. The known money firms, on the other hand, if let's say you did your run up, you had a drown, you broke a rule or something, they still pay out your profit split on any of that. So the gotcha rules are the most prominent part of the unknown money prop firms. Now, a real money firm, the difference is you'll definitely be trading a live account with the firm's own money. I've not seen any example of these firms not paying you out. And I've even seen, not definitely, I have seen that when you do break a rule, a drawdown rule, for example, they still pay you out. In fact, it's in their terms and services. You can, or terms and conditions. You can go and look at those. So again, let's say you had a $7,000 in profit and you had a drawdown, you broke a rule, whatever. That 7,000 is still your 90%, 80, 90% of it, whatever it is still paid out to you, even though you've had to reset or start it over. Okay. So the incentive alignment here, the real money prop firms are most interested in your trading success. So they're the most aligned with you. Now, you're not going to be able to get like huge amounts, large numbers of accounts and a bunch of other little tricky things that you can do with the unknown prop firms. But at least on the real money prop firms, their incentives are the same as yours. Hey, let's make money trading. The unknown prop firms make no risk, high return, like very understandable returns on tryout fees, reset fees. And if they go into the unknown of trading, it becomes a high risk, unknown return environment. Does that make sense? So basically, if you know that you have $10,000 coming in this way, but you could possibly make an extra $10,000 or $20,000 $10,000 with no risk, but you can make $10,000 with a bunch of risk. You stick with the known risk way, right? And especially because all you need to do is increase advertising, and that dollar amount goes up. You don't have to put it on, black and roulette or something. Okay. The unknown money prop firms are incentivized to make their risk-free money on tryout fees, reset fees, assignment fees, and monthly subscription. So their incentives are different. They're incentivized to getting you to make a mistake on a rule resetting or, continue to do these tryouts. Now, I'm not saying that that's their business entirely. Some of them definitely put you in live trading environments, and you are trading money and you're making money for their account, and they're good with it. I'm not saying that that doesn't exist. I'm just saying that there's a lot of them that you're only trading sim. And if they have to pay out, they actually are losing their risk-free money, right? Because you're successfully trading an account that's paper trading, but you're getting profits. And so they have to tap into their profits from fees in order to pay you. So the incentive starts to get a little, if you're paying somebody to do something that you're not profiting from, like you're profiting because you can screenshot that you got paid out and people will be like, oh, street cred and all that. But after a period of time, and that person's making $10, $12, $15, $20,000 a month every month, well, that's 10, 20, 30 tryout fees that they have to give away. So sometimes the incentive starts to get misaligned in that environment. But again, if they pay out, right? But if they pay out, who cares, right? That's the line. I've said it plenty of times. And if that's the route, if you can get funded, stay with the rules, and get paid out, who cares? Get paid, get the money. It's not a long-term mutually aligned relationship. You already know that the incentives are a little off right there. They're just a little bit off. So you understand, hey, maybe it's a short-term thing. I'm going to, do these tryouts, make some money, get a little bit of capital, and then, go work in go in another route. So the way I look at it, your long-term success in this starts to be, you're aligned in the first probably of this 6-step process. You're aligned with either of the prop firms in the first 3 areas, right? Get funded, get paid, and then start, removing debt and obligations and get breathing room and, like replace your full-time salary or something like that. You can do that in either prop type of business, whether it's a real money or an unknown, right? As you get further down the road, you want more stability. So a real money prop account becomes a lot more stable because there's less rules. And even if you make a mistake and break a rule or something like that and get stopped out of a real money firm, you still get your profits. So you're aligned with both, but eventually you want to start getting into real money. And then from there, you want to run your own capital without a partner. So it's your own money, right? And get success doing that. And then, or you could go raise money, go to First New York and show your track record and get further funding. Or go raise a fund, a number of different examples. All of these steps along the way, you're learning discipline, risk management, focus, and you're buying yourself a little bit more room to achieve what you're looking for. So you need to understand the game you're playing, right? The game you're playing with a real money firm is you're just here to make money with them, with an unknown money. Look, your job is to obey their rules, achieve their objectives, get paid out, and start looking for ways to play the long game. The unknown money firms might be your long-term partner. I'm not saying they're not. They may have a great opportunity for you. So continue along with that. And that's pretty much what, like I said, like and subscribe. That's this week's course on the unknown and real money, different types of prop firms. I'll go a little bit deeper into that, but you can go to pollinatetrading.com/prop. You can get access to the Curvy trading system, 50% discount there. There's also a $200 discount on the trading lab, which I've talked about in the other videos of this course. And then at that site, you can also get access to a couple of prop firms that I work with, that I enjoy working with, and have spent time with, worked with over the years. There's some discount links for 20 to 50% for the tryouts if you want to go those routes. One of them is a real money firm. 2, 3, I don't know, actually. But yeah, pollinatetrading.com/prop. Check it out. And again, like and subscribe, and I'll see you in the next episode when we will be covering, what will we be covering next time? Tune in to find out.